Chewy reported quarterly financial results that were mixed. I saw some really good things in there, and I saw some things that are raising some question marks. And I can understand why the stock price is down over 6% following these quarterly results. So I'll review these financial figures from Chewy's latest update, and I'll also update my recommendation for Chewy stock. Remember, I've had Chewy stock rated as one of my top stocks to buy, and I'll let you know if I still think it's one of my favorite stocks or if the results in the latest quarter are reason to downgrade this investment. Let's take a look.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So like I highlighted, Chewy stock price trading down over $2 per share to $31.25 or negative 6.63% as of this recording. It'll be interesting to see if by the end of this recording the stock price recovers or if the initial reaction from stock market investors remain as they are. So Chewy reported net sales of $2.9 billion, which was up 4.8% year over year. That was much better than management was expecting. The gross profit margin came in at 29.3%, and while it was up 80 basis points year over year, I've seen a couple of quarters of decline, which I'll share with you, which could be causing some investor concern there. Net income of $3.9 million included stock-based compensation expense and the related tax expense of $80.4 million. This tax expense could be one reason why the stock price is down. So management saying that they delivered top-line growth exceeding the high end of their net sales guidance, a sequential increase in active customers, and continued expansion on adjusted EBITDA, and their robust free cash flow generation continued. So Chewy added 160,000 customers quarter over quarter, which was a great sign. Chewy had been experiencing volatile changes in customer growth because of how many customers the company added in 2020, 2021, and 2022 when people were still avoiding going out to stores, and so an online pet company really benefited from that trend. And so because it added so many customers in those years, as those customers mature, some of them leave the company, and so it had a larger customer base that was churning, and new customer additions were not keeping up with those that were churning from a few years ago. And so it's good to see that they generated net active customers in the most recent quarter of 160,000. They also increased the net sales per active customer to $567. This is trailing 12-month spending by each net active customer. And Chewy has noted that over the years, customers tend to increase their spending as they grow with Chewy, as they learn about what Chewy offers, and as Chewy expands its product offering, customers spend more and more with Chewy. So that is great for long-term investors, is that existing customers, their long-term value continues to increase. And the trend line of their net sales growth, you can see they surged in 2021 with a 25% net sales increase for the year. And that's been declining ever since, down to 13 to 10. And in the most recent trailing 12-month period, it was just 3.7%. But you can see growth is accelerating again from 2.6% in Q2 2024 to 4.8% in Q3. And management is forecasting a robust 16% growth in the upcoming quarter. So it looks like management is suggesting that the slowdown is over and they're returning to growth again, accelerating growth again. All right, one of my favorite things about Chewy's business model is auto ship customer sales. The majority of sales on Chewy's platform are from auto ship. And this is similar to the subscribe and save feature on Amazon, where you tell Chewy, send me my pet food every month, or every 2 weeks, send me my pet food. And so that's the majority of Chewy's sales. Why do I like that so much? It makes a business so much easier to operate. If you, as the manager, as the owner of the business, You know when your customers want the products, how much products they want. It makes it easier for you to manage that, right? You can order your inventory to match those purchases and you won't have any overages. You won't have inventory in the wrong places. You won't have shortages. You won't have sellouts. You won't have products that don't sell. It just makes it so much more easy to manage, and therefore it can lead to better profitability, better cash flow generation, better returns on invested capital. So here's one trend that I've identified as being a little bit concerning with Chewy is after several years of increasing the gross profit margin, you can see from 26 to 28 to 29 in the most recent trailing 12 months, you can see a declining trend in the most recent 3 quarters. Q1 2024 gross margin of 29.7 down to 29.5 down to 29.3 while revenue is increasing. This is a bit curious, and it's something that investors don't typically like to see, especially if there's a trend developing here. Now, one of the reasons why this could be happening is a mix of products that are selling are not the higher margin products. Maybe, people were buying more toys and things like that generate higher margins and less food. And now that pet parents are spending more on categories that generate lower margins, it could be hurting Chewy's gross profit margin. Still, the company is expanding free cash flow at an increasing rate. You can see here, free cash flow in 2021 was only 9 million, 119 million in 2022, 343 million in 2023, and in the trailing 12 months it increased to 363 million. And so far in 2024, you can see the cash flow. I mean, if you compare the third quarter with the third quarter of 2023, the free cash flow more than tripled year over year. So excellent trend lines there. And then looking ahead, management expects way better results than they initially thought to begin the year. They're forecasting 13% year-over-year revenue growth for the fourth quarter. I may have misspoke earlier and said 16%, but it's actually 13%. And they're forecasting 6% year-over-year growth and for the year, and 4.7% in adjusted EBITDA margin. Now, if you compare that with the forecast in the previous quarter, they were saying that for the full year, their net sales would increase at a midpoint of 4 to 6. They now expect at least 6. Adjusted EBITDA was expected 4.6% at the midpoint. It's now expected at 4.7% at the midpoint. So they lifted their guidance there for both revenue growth and for adjusted EBITDA margin. They've done this for, I believe, each quarter this year, and they've beat expectations each quarter this year. So it's reasonable to assume that they will beat expectations again in the next quarter. They've been conservative with their forecasts so far in 2024. Looking at the valuation, Chewy is trading at a forward price to earnings of 25, which, given the company's growth on the top and bottom line and in cash flow and customers and the markets they're addressing, I like this company at this valuation. So to update my recommendation of Chewy stock, I still think it should be rated, or it is rated, on my list of top 25 stocks and top 10 growth stocks to buy right now. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.